Hello, this is Matt Russell, and today I wanted to discuss two separate news strategies that I use in my own trading. The first is a longer-term strategy applied to a 60-minute chart. The second is a shorter-term strategy applied to a 5-minute chart. Now, in terms of the hourly chart, what I'm looking for is clear resistance or clear support levels. So in this example, we have 3 points of resistance forming a resistance level and 3 points of support forming the support level. And where I want to see prices just prior to the release is in the middle of the range. Now, in terms of the news release itself, I'm not overly concerned about what the news is or trying to make sense of the news. All I really want to see in terms of the news release is to make sure that it's not a surprise. And what I mean by that is if it's not a surprise, that means normal price behavior should follow. And if normal price behavior follows, that means prices should be contained within clear resistance and clear support lines. So what I'm looking for as the news is released is for prices to either move up to the resistance line. I would look to enter at resistance and place my stop 30 to 50 pips above resistance. Conversely, if prices move down to the downside, I would look to enter at the support line and place a stop 30 to 50 pips beneath the support line. Now, I also want to see what I call, and again, this is my own personal trading, short-term confirmation of the resistance or of the support level. So what do I mean by that? Essentially, if prices, let's say, move up to the 141 level, I would like to watch in real time, and this would be a very short amount of time that I'm looking at it. If they move up to 141 and then, let's say, move down to 140.90, the second time they move up to 141 is when I would enter the trade. Again, I just need very short-term confirmation, and there are no exact rules. Now, the second strategy, again, is more short-term, and everything is occurring in real time. With a longer-term strategy, it's something that you can kind of set up, let's say, a half hour before, or even a few hours before. You're going to know where those levels are. On the shorter-term strategy, it's just a 5-minute chart, and everything is happening in real time. Now, in terms of the shorter-term strategy, what I'm looking for, as a general rule, is for the market to leave behind a long wick. And what I've illustrated here, this is one 5-minute candle, and this is the transformation within those 5 minutes that I am looking for. So let's say during the first minute, the news is released and it's slightly bearish news. And again, I'm not overly concerned about exactly what that news is. I just want to make sure that it's not a surprise. So let's say the market moves down 20 pips. You have one large, ugly red candle, and I'm not going to do anything. What I'm waiting for is, let's say in the third minute, prices move back up higher a little bit. There's some buying pressure, and the market leaves behind a wick of, let's say, 10 pips. But really, ideally, what I want to see is as the candle is closing, let's say it's about 4 minutes and 30 seconds into that 5-minute candle, I'm looking for prices to leave behind a relatively long wick, which might be 15 or 20 pips. And what I'm going to do is enter on the open of the next candle and place my stop just a few pips beneath that wick low. Now, why is that? If you think about it, what's happening during this transformation? What caused it? It's the buying pressure down here. Now, it could be a group of buyers who see the more attractive price and jump in, or it might just be one large order left by a corporation, let's say, a week ago, and the market's moving down. The point is, it's protected. I am protected. The market has given me a little piece of information, and I'm using that information to my advantage by decreasing my risk and placing a more protected stop. Again, my name is Matt Russell. Thank you for listening, and good luck with your trading.